What's up, guys? I hope you're ready, because today we're diving headfirst into a topic that has crypto investors buzzing with excitement and anxiety at the same time. Bitcoin holders, Kaspa supporters, and anyone tracking the broader crypto markets. Listen closely, because the fourth quarter of 2025 could be the setup we've all been waiting for. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. The big question we need to ask is simple. Are you truly prepared for what's about to unfold? Because according to respected analysts and voices in the space like Mitchell Lim, the macro setup heading into the last stretch of this year looks nothing short of spectacular. And here's the kicker. If history decides to rhyme, which it often does in crypto markets, we may be staring at one of the most explosive quarters we've ever seen. Think back for a moment. Bitcoin already staged a powerful rally at the start of October, pushing sentiment back into bullish territory. Every dip so far hasn't looked like weakness. It's looked like an opportunity. In fact, the market is practically screaming buy every time Bitcoin retraces even slightly. But here's where it gets interesting. While Bitcoin has swept through liquidity above recent highs, it's also creating the perfect backdrop for altcoins to shine. That's right. Bitcoin stalling isn't necessarily a negative thing. In fact, it's often the prelude to altcoin season, and this time is shaping up no differently. Whenever Bitcoin pauses near critical levels, capital tends to rotate into other assets. And right now, we're seeing early signals that altcoins are preparing to flex their muscles. The setup suggests that we may not only be on track for new Bitcoin all-time highs this quarter, but also for an altcoin rally of historic proportions. Now let's bring Kaspa into the conversation, because this is where things get really exciting. Mitchell Lim highlighted something that many of us quietly believe. While Bitcoin is revolutionary, Kaspa represents the next step forward in terms of speed, efficiency, and scalability. Both assets serve as an escape hatch from fiat currency and the endless cycle of inflation. Both deserve serious attention. This isn't about being a Bitcoin maximalist or an altcoin purist. This is about analyzing two assets that are pushing the boundaries of what's possible in digital finance. And if you think this is just hype, wait until you hear the projections being floated around. According to analysis shared by Nothing Maxis, who happens to be a CPA and PhD, Kaspa could become the fastest asset in history to reach a $1 trillion market cap. Let that sink in. Amazon took 24 years to reach that milestone. Bitcoin did it in 12. If the pattern of acceleration holds true, Kaspa could theoretically achieve it in only 6. That would put it on track to hit that mark by around 2027. And by the way, that's only about 2 years from now. Let's unpack this wave theory perspective because it really frames Kaspa's potential trajectory. The first wave would carry Kaspa from around 10 cents to $1, delivering a tenfold return for early adopters. The second wave sees late entrants pile in, pushing it toward $10. By the third wave, FOMO becomes overwhelming, with people desperately chasing even small multiples, propelling the price toward $20 or even $30 at the cycle peak. Of course, none of this happens overnight, and hitting $1 is the immediate milestone that needs to be achieved before anything larger can be considered. But the structure makes sense, and it mirrors patterns we've seen across other historic crypto runs. Now, there's another fascinating theory emerging within the Kaspa community proposed by Axel that deserves some serious consideration. He suggests Kaspa could develop a price cycle independent of Bitcoin. The logic goes like this. Miners are constantly optimizing their setups, buying the most efficient ASICs possible. If Bitcoin's profitability declines during bearish phases, but Kaspa adoption and network traffic continue to rise, Kaspa mining could actually become more profitable. This could drive sustained demand and potentially decouple Kaspa's market cycle from Bitcoin's. Is this just wishful thinking or a glimpse into a possible future? I'd love to hear your opinions on this one. Moving into the hard data, because this is where the story gets very compelling, Kaspa's network has been absolutely crushing records. Recently, Kaspa hit a throughput high of 5,584 transactions per second. That's not just theoretical capability. That's actual real-world performance. To put this in perspective, no other proof-of-work blockchain has come even remotely close to those numbers. Kaspa is showing in real time that it can scale in a way that skeptics once thought was impossible for a proof-of-work system. But the on-chain activity doesn't stop there. Whale movements are painting a clear picture of growing institutional-level interest. According to Scape Squad, Kaspa's second-largest wallet just received over 48 million KAS in deposits, valued at nearly $4 million, with the transfers happening in rapid succession from major exchanges like Gate and Bybit. Even more telling, these deposits happened within minutes of each other, and there was even a test transaction in the mix. Analysts are speculating this could be Binance or another major exchange preparing to deepen its involvement with Kaspa. Either way, when money of this magnitude is moving into the ecosystem, it's a strong signal that big players are positioning themselves ahead of retail. Another wallet has also been making waves. Previously ranked number 3, it jumped into the second position after adding a similar amount of tokens. This isn't small fry retail trading. These are large, coordinated moves, and they suggest that Kaspa is transitioning into a phase where institutional capital begins to take the lead. For retail investors, ignoring these signs could mean missing the early phases of something massive. Let's step back and talk fundamentals, because the numbers on price and throughput only tell part of the story. Kaspa is not just another altcoin riding the coattails of Bitcoin. It's the product of more than 5 decades of accumulated research and technological progress. Its architecture is built on the groundbreaking work of Jonathan Sampolinsky, a Harvard PhD who happens to be the most cited researcher in all of crypto. Combine that with the reality of global debt surging toward $1 trillion, and suddenly the notion of Kaspa achieving a $1 trillion market cap doesn't seem outrageous at all. In fact, it seems like a logical outcome of adoption scaling alongside systemic financial pressures. And if you think the stress tests are just marketing gimmicks, think again. In a recent community-led experiment, Kaspa handled 4.62 million transactions over just 35 minutes, with peak throughput exceeding 4,800 transactions per second. This isn't theory anymore. This is actual proof of scalability. No other proof-of-work blockchain comes close to matching this level of sustained throughput. Meanwhile, the ecosystem is expanding at a pace that's hard to ignore. Kaspa's Layer 2, Kasplex, has already processed nearly 100,000 transactions since launch, while KRC20 tokens dominate activity with over 2.6 million transactions in just a week. The number of active addresses is rapidly approaching 500,000, a strong indicator of organic adoption. And to top it off, Kaspa's core figures like Sampolinsky and Michael Sutton have been trending in mainstream business and finance discussions, signaling that awareness is breaking out beyond the crypto bubble. Now let's pivot into price action, because that's what many of you are most eager to hear about. As of early October, Kaspa is trading near 8 cents. Over the past 30 days, it's down about 21%, but it's up slightly over the last 24 hours. On the surface, that decline might look discouraging, but in context, it's far less worrying. Remember, Kaspa hit an all-time high of 20 cents back in July 2024. Even though it's corrected significantly since then, the level of activity on-chain and the steady inflows of capital tell a very different story. This isn't the behavior of a dying project. It's the typical ebb and flow of an asset consolidating after a massive run. Predictions for Kaspa's near-term trajectory vary widely. CoinCodex suggests a potential range between 8 cents and 37 cents in 2025, implying a potential quadruple from current levels. Digital Coin Price expects Kaspa to retest and surpass its previous high of 20 cents before consolidating around 17 cents to 18 cents. On the flip side, Wallet Investor offers a more bearish case, forecasting a decline toward 3.5 cents by late 2025. Changely offers a middle ground, estimating a floor near 11 cents with a possible top at 22 cents. Looking out further toward 2030, the divergence in forecasts grows even larger. Digital Coin Price sees Kaspa between 39 cents and 45 cents. CoinCodex projects a broader range from 15 cents to 50 cents. and Chancellor's prediction places Kaspa as high as 72 cents. These wide gaps reflect one key reality. Kaspa is still an emerging project, which means the potential upside is massive, but uncertainty remains high. So, should you invest? Let's be clear. What I can say is that Kaspa is a promising project with real-world use cases, growing adoption, and the technological foundation to back it all up. Its unique block DAG structure enables fast, scalable, and secure transactions while still preserving the decentralized ethos of proof of work. For investors looking for projects that could realistically grow into multi-billion or even trillion-dollar valuations, Kaspa absolutely deserves a spot on the watch list. From a technical perspective, Kaspa has spent most of the past few months consolidating after bottoming around 5 cents in May. It's been carving out a basing structure, with the 200-day exponential moving average acting as the key pivot level. A sustained reclaim above this EMA would signal readiness for a much larger breakout. Until then, Kaspa is likely to range between 6 cents and 9 cents. If it does reclaim the EMA and RSI confirms strength above 50, then we could very well see moves toward 10 cents to 12 cents in the near term. On the supply side, Kaspa's chromatic emission schedule remains one of its most attractive features. By gradually reducing emissions, Kaspa is introducing a deflationary dynamic into its tokenomics, a rarity for proof-of-work systems. Hash rate and throughput metrics continue to recover after the summer slowdown, further proving that the network's health remains intact even during periods of price weakness. So here's the big picture takeaway as we close this out. Bitcoin is setting the stage for altcoin strength by consolidating near highs. Kaspa is simultaneously proving its scalability, attracting major capital inflows, and positioning itself as one of the most exciting projects in the crypto space. The short-term price may fluctuate, but the long-term thesis is incredibly strong. If Kaspa does achieve the trajectory analysts are predicting, we may be witnessing the birth of the fastest trillion-dollar asset in history. Whether that happens in 6 years, 8 years, or not at all, the opportunity is here today. The question is whether you're paying attention or letting it pass by. So, what do you think? Can Kaspa really reach that $1 trillion market cap? Is Bitcoin's current stalling the start of the greatest altcoin season yet? Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.